What's up, people? T-Fade back here with you guys with the $500 Robinhood challenge. And this is, I guess, the start of week 2, even though we didn't really have a complete week 1. We only had like a day and a half of trading last week. Just so here's an update for you guys. We are down. Overall, we are down almost 8%. It's not good, but just checking in here. I did, full disclosure, I did yeet some of that away on Bitcoin this weekend, which I will be doing from time to time. I will be making low probability plays just to play around, but we're not gonna risk too much of our portfolio at a time doing stuff like that. Our main goal is going to be consistent, steady gains from high probability plays, but we will buy a lottery ticket every once in a while, buying options, playing with Bitcoin. I saw a really obvious head and shoulders, inverse head and shoulders, so I thought it was a good entry point, but that's for another day. Anyway, so we are down a little bit today. So we actually did get one fill today. I put in a bunch of buys for some credit spreads, but we did get one fill. We got a fill on Disney, 149, 148 put. So that means we sold the 149, bought the 148, and that one is actually up a little bit today. This is 12/6 expiration. Let's just go through some of our other buys from last week. So XRT, we sold the 44, bought the 43.50. So what that means is we want the price of XRT to stay over 44 so that we collect all of our premium. So we're looking good here, even though it says we're down. Even though it says we are down $6, we are actually out. It's actually out of the money, so that if it stays over 44, it expires worthless, and we keep all the cash. So that's why we sell credit spreads. That's why we sell them. Twitter, it also says we are down. We sold the 30 and a half and bought the 30, so that means we need Twitter to stay over $30.50, which it is a little bit down right now, but not much. We have till Friday, and that's one of our big losers. And Bank of America, we bought the $34 call, and it is still not in the money, but we're up. We might think about selling that if we were in the money tomorrow, because we risked $8, and we are up 3. That's not a bad return on investment. AT&T and American Airlines is killing us. So anyway, that's the update. It's fluctuating obviously right now, but that's fine. It'll do that throughout the day, and Friday is payday, quote unquote payday for us. So that's when we'll know whether we did well for the week is on Friday, because that's when all the options we own right now or have sold or will expire. But one more, I wanted to go through one other setup that I really like, and it's just like a credit spread, but it's 2 credit spreads in the same transaction. And what that does is it brackets the market. So it's a very market neutral trade. Like if you don't know or care if the stock is going to go up or down, the underlying price, if you don't know if it's going to go up or down, or if you don't care if it goes up or down, or if it looks like the underlying or the stock has just been trading sideways for some time and you think it'll continue to do so, this is an excellent trade to make, and it's actually called an iron condor. So we're going to go through an iron condor right now because I want to look at AMD. Sorry, I got a frog in my throat. So AMD, let's look. Oh, you know what I wanted to do? No, I don't want to do AMD. I want to do Walgreens, because Walgreens has more volatility right now. And if you remember, higher volatility means we get more for the options when we sell them. So I want to go to Walgreens. It has higher implied volatility right now. So Walgreens is trading about 59.26, and you can see I've already drawn a couple of lines here. It is in a clear downtrend, and this vertical red line right here represents December 6th. So that'd be close of business December 6th, and we're going to try to sell some credit spreads that expire on December 6th, so this week. So you can see these other two are just a trend line, like a channel where it trades, because everything normally, stonks will trade in this range. They'll just kind of go up and down and up and down. And then this is our expiration right here. So if you look, this range here is about 59.60 to 57.50. So 59.50 to 57. So about a $2 range. So what we want to do is we want to look at our chance of profit, probability of profit, and find a good entry for this, as long as it's around 57.50 to 59.50. So like I said, we are bracketing the market here. We don't care where Walgreens price goes up or down. We just want it to kind of stay trading sideways. So let's see if we can afford this. All right, so I always like to go to sell the put first, just to start at the bottom. So we said 57.50 looked good to us, and if you look here, you can see the 57.50 has an 87% chance of being out of the money. That means there's a 15% chance that is in the money, but we like high probability, so this gives us an 88 at the moment, 88% chance of making this, of hitting this mark. So let's sell this put, and then we're going to buy the $57 put. Remember, we're selling and then we're buying for insurance, and that will result in a net credit in our account, so that we get money for selling these overall. That's why it's called a credit spread, because we get money. So now we have our put spread set up already. So what we want to do is we want to go to above. We want to go to the top of this range. We want to go to the top of this range here. So we sold a credit spread right here at 57.50, where we said we wanted it. Now we need to go and sell this one at the 59.50 at the top of this range. So we're going to go to sell a call at the top, and what did we say it was? We said 59.50. So let's check our probability of profit. So 59.50 is really pretty close to the money. So we're betting this would actually be more of a bet that the price continues its downtrend. So we don't want to get directional with this trade. We want to keep our probability of success high. So we're going to go a little further out of the money. So this is the price, 59.35. So the 59.50 and the 59 is what they call at the money strike prices. So we want to go a little further out and bracket it. So we'll looks like the 60. Where's the 60? The 60's up here. All right, we like the 60. I'll tell you what, we'll gamble. We'll sell the 60. We're gonna sell the 60, and we're gonna buy the 60 and a half for insurance. All right, so you can see right here, if you look over here on this side, this is 4 options or 2 credit spreads, and Robinhood already knows what this thing is called. I didn't make it up. It's called an iron condor. So we're just bracketing the market. We're bracketing the market. We want it to trade sideways or continue its trend in this channel. So it doesn't have to trade perfectly sideways, although that would be perfectly fine. It can trade sideways. It can go up a little. It can go down a little. The only way we lose money or break even is if it breaks above one of these trend lines by Friday, which, like I said, is low probability, which is why these chances of profits are where they are. So these so we have it like a 78%, 73% chance on this side, which is a 27% chance of missing it, and an 88. So that's 12. Basically, what you do is you add them up. So it's 12 and 27. So it's about a 40% chance of being in the money. So we have a 60% chance of making money on this trade, that this will expire worthless, and we will make money on this trade. So let's continue. Let's see how much this is going to cost us. We're going to sell one iron condor for 19 bucks. When I say for 19 bucks, that means we get $19. We want all of these to expire worthless. I know it doesn't make sense, but since this is a credit spread, which means we are getting money for selling it, it's a credit spread, we are getting $19 net if all 4 of these options expire worthless, and we're risking $50 to do it. So we're getting 19, we're risking 50. We're risking 50 to get 19. So it's a pretty solid ROI, especially looking at the chart and seeing this solid downtrend channel, and I feel pretty good about our strikes. So we're going to submit that. Do it. All right. Did it do it? I don't know why it's not doing it. We're going to wind up buying 100 of these. Anyway, we submitted our iron condor, and then it doesn't get filled right away. But anyway, that's an iron condor, and that's a play that we hope to get filled. And yeah, so I'll come back on Wednesday. We'll do Wednesday weeklies and update you guys on any other fills. And if something gets canceled between now and then, we'll have a little more cash to play with. And we'll try to scalp some FDs. All right, so anyway, that's it for now. Peace.